Hello, folks. It is Wednesday, October 11. It's about 2:30 in the afternoon on the East Coast of the United States. In this video, I'm going to be talking about oil and natural gas. But first, I'm going to talk about gold and silver. We're just going to take a quick look at the charts. So let me share my screen and we'll jump right in. Oh, there's the intro. Oil price forecast. Here's gold. This is COMEX, so gold futures, daily time frame. Nice pop overnight and then on into the day. So currently up, we are up $9.80, about 0.5%. And just a continuation of this bullish move and pushing up into the 20-day moving average, obviously. Looks like we're about to get a new buy signal from MACD. Notice as well that we're coming up off a very oversold level. And so, due for a rally. And then we're about mid-range on stochastics, which I use as my measure of energy. Here in the silver, same thing, daily, COMEX, pushing up into testing this resistance level. Note that it was support and support failed here, and now we're testing that level from below. Currently on the day, we're up 19 cents, which is 0.85%. Similar to gold, looks like we're about to get a new buy signal in MACD as we come up off of this very oversold level. Energy approaching mid-range. So anyway, metals are looking nice. They were oversold, due for at least a counter trend rally. But we've got multiple factors, actually. We've got the dollar, which let's just jump to that chart. So it appears that the dollar has peaked in this time frame and is rolling over for some level of correction. And note in MACD that we were very overbought. And so the dollar was due for a correction. We'll see how far that correction goes. But so anyway, this is a headwind for the precious metals, having the dollar soften. And then the interest rates as well are backing off. They had become all across the duration curve. The debt instruments had become overbought. And so they were due for a correction, a pullback. And then on the move away from risk assets, we've got investors moving into treasury bonds because, they're presumed to have zero risk or essentially zero risk. And so investors are moving into treasury debt instruments as a risk-off move. And that also serves as a headwind for the precious metals. As interest rates decline, the metals tend to rise. We look at GDXJ. These are the mining stocks, or my proxy for the mining stocks. We can see we got a nice, this was on, let's see, that was Friday. And then so Monday, when the markets opened Monday, we got a nice gap upward in the mining stocks. And of course, that was a reaction, partly a reaction to being oversold, like the rest of the metal sector. And then a reaction to gold and silver being up overnight Sunday. And so nice pop up on Monday, follow through on Tuesday, and now follow through today as well. Looks like we're currently dealing with resistance right around the 20-day moving average. Note that we have a new buy signal in MACD, energy just above mid-range. And like the metals, the mining stocks are coming up off of these oversold levels. So that's enough of the metals. Let's jump in. This is comedy, in my opinion. So this is floating around. I guess that was yesterday morning. So the story that we're supposed to believe is that American weapons are showing up in Gaza because Russia is providing American weapons to Hamas in an effort to make America and the Ukraine war look bad. So anyway, if you believe that, I got a bridge to sell you, let me tell you. So let's keep rolling. Okay, so now we're talking oil and natural gas. And so I just wanted to set the background for where we're at, where I see that we're at currently. So Saudi Arabia and Russia, well, let me back up even a little bit more. So a couple of months ago, Joe Biden went to Saudi Arabia and said, pretty please, will you increase oil production so I can bring gas prices down and reduce inflation and oh, by the way, I've got an election coming up. And not only did Saudi Arabia say no, they actually reduced production after Joe returned home. And so, Saudi Arabia is not on board anymore with kowtowing to U.S. wishes. And of course, that was part of the petrodollar agreement said implicitly or explicitly, one, you will maintain excess capacity, which of course costs money, excess capacity, so that when we call you up and say increase oil production, you're able to do so. That's excess capacity. But for the most part, you'll just leave that excess capacity in the ground. You won't use those pumps. You have to maintain them so they're ready to come online. And again, that's where the cost comes in. But so anyway, that was part of the petrodollar agreement, is that you'll maintain excess capacity so you have the ability to increase production when we say so. You will only sell petroleum in the US dollar. So that was the major plank of the petrodollar agreement. And then third, the profits from your oil trade you will use to buy U.S. treasuries. And so three significant planks of that petrodollar agreement. And in my opinion, that agreement is now history. And even more so in January of 2024, when Saudi Arabia becomes a full board member of the BRICS organization. So they're already doing deals for oil in currencies other than the US dollar, and it's reasonable to expect that will increase in starting in January. So that's kind of background. Another point to keep in mind is that with the 6 new members of BRICS in January of 2024, 80% of the world's oil production will be occurring within the BRICS organizations. And so if you're looking at the globe and saying, okay, who controls oil production? Well, clearly it's the BRICS with 80%. So that's important to keep in mind. And then, so Saudi Arabia had already reduced output of oil, Russia as well. And then they recently agreed, this was October 4th, they agreed to continue that reduction in oil output through the end of the year. So, and that's what this article is telling us, is that they're going to continue with their reduced production through the end of the year. And then this is new. So that was oil. Now we're talking about natural gas. And so this just occurred, that was on the 9th. Israel told Chevron to shut down the Tamar, if that's how you pronounce it, Tamar gas field. So shut down the gas field. We don't want it to get hit, because if it gets hit and it's producing, well, then we got a big mess. Whereas if you shut it down and it gets hit, well, then we got a little mess. And so anyway, a reduction in natural gas output because that gas field has been shut down. It was a major source of gas for Israel's power generators and industry. And so my understanding is that they've switched fuels for the generators, which I assume means coal. Sorry, Greta Thunberg. So burning coal instead of natural gas to produce electricity. Let's keep rolling. So this is that gas field on the map. You know, here's Israel, Lebanon to the north. Yeah, there's the Israel. Yeah. So anyway, that's where that gas field is. It's 25 kilometers offshore. So what is that? 6, 3, about 15 miles. So about 15 miles offshore, within range of rocket fire. That's the key, is that it's within range of rocket fire. And so they shut that field down. Evidently, there was enough output from that gas field that it supplied not only the generators in Israel and industry in Israel, but also they were able to export gas to those two countries. So anyway, reduction in natural gas output because that field has been shut down. And then another recent event in the natural gas industry. Now, this isn't a shutdown of production. It's a shutdown in a pipeline. This is a pipeline that runs from Finland to Estonia, and we'll see a map of that here in a sec. October 10th, and there's also a telecom cable. Connecting Finland and Estonia. Unclear at this point who did it. And of course, you know, they're blaming the same person they blame for everything right now, as you can imagine. And so anyway, this is NATO's leader, Jan Stoltenberg, I think is his name. General Jan Stoltenberg will mount a determined response if a deliberate attack is proven. And, you know, that's humorous on so many levels. Well, first of all, NATO doesn't have the ability to mount a determined attack at this point. All of the European armies have been reduced to, you know, basically token forces. The way Scott Ritter puts it, you know, the UK military, you could put them in a soccer stadium and have tens of thousands of seats empty at this point. And so anyway, NATO really doesn't have a military at this point other than America. You know, what America is able and willing to supply. And then, you know, the NATO countries obviously have significantly depleted their arms by shipping them all to the Ukraine conflict, Project Ukraine. And so anyway, just amuses me that, you know, NATO is going to mount a united and determined response from NATO. So anyway, that's this article is suggesting that the damage to that pipeline and to the telecommunications cable caused by mechanical force, not an explosion. So, you know, somebody drug an anchor over it, perhaps. Although my understanding of these pipelines, they're encased in concrete to protect from things like, you know, somebody dragging an anchor over them. So anyway, this is another event going on in the natural gas industry, potential effect on prices. Here in red, we see this is the pipeline that has been damaged and shut down. And there's the significant point is not only damaged, but shut down. there's Estonia. This is Finland up here in black, and the dashed line, dotted line. That's, excuse me, Nord Stream 1 and 2. And so those two pipelines obviously were shut down September 27 of 2022. Now we've got this pipeline shut down currently. So let's keep rolling. This pipeline, it's bidirectional, so it can flow in either direction. And the explanations, the information I found in articles is the pipeline was built to balance supply among those northern European countries. And so it can flow in either direction. On Sunday, when it was shut down, gas was flowing from Finland to Estonia, and Estonia was forwarding it on to Latvia. And then, 2 a.m. on Sunday, that's when they detected something wrong and shut down the pipe. This is a pipeline map. So here's Finland, and we can see that's the pipeline that has been damaged and shut down. There's Estonia, and then links on into Latvia. This is another map. There's Finland, Estonia. And so it's the pipeline that crosses that gap in the Baltic Sea, Gulf of Finland is what this body of water is called, Gulf of Finland. So all three of those countries are EU and NATO members. And important to keep in mind that Finland was just added to NATO on April 4th. And so a recent member of NATO, long border with Russia, and a number of the analysts that I have heard talking about Finland joining NATO suggest that it was a mistake, that ultimately Finland will realize that they made a mistake by joining NATO. They were better off as a neutral party, because now they have to man this 830-mile border with Russia that they're going to have to guard, or at least pretend to guard. And Russia is building forces. Russia is serious about this new NATO border. They're building up forces, new divisions in their military forces, specifically to man this new border with a NATO country, being Finland. And so anyway, that's an important point to keep in mind. And then if we look at the Baltic Sea and the Gulf of Finland, so we've got primary Russian Navy port is in Kaliningrad, which we'll see on the map. And then we've got a commercial port, significant Russian commercial port in Vyborg. That's where the one of the Nord Stream pipelines originates. And then we see the extensive connections, road, rail, sea, and river, with the entire Russian transportation network. And so this significant port in Vyborg and navigable year-round with icebreaker assistance. And of course, Russia has some of the best icebreaker technology in the world. So this red dot, that's Kaliningrad. And so that's the bulk, as I understand it, that's the primary port for the Russian Navy. And then Vyborg is way up here. This is Vyborg in the Gulf of Finland. And so this, let's look at this. This was back in July of 2023, after Finland and Sweden joined NATO, and they're calling the Baltic Sea NATO's lake. And basically poking the bear. And, you know, it's like the West hasn't learned yet that you don't poke the bear. Someday they will, perhaps. But anyway, it just, as I was getting ready to do this video, I was thinking of the Jim Croce song, you know, you don't mess around with Jim, only it's you don't mess around with the bear. And so in particular, and that was the point I wanted to make with this map. These new NATO countries that are way the heck up here, to think that NATO's actually going to come up and protect either Finland or Sweden, it's, you're kidding yourself. It's not that NATO doesn't care. NATO at this point does not have the ability to project power up into Sweden and Finland. Anyway, they don't. And so anyway, for a spokesperson to come out and poke the bear by saying that the Baltic Sea is now a NATO lake, well, that's just not a very intelligent thing to do, in my opinion, because again, here's Kaliningrad with the Navy, the Russian Navy, and then here's Vyborg, which is a Russian commercial port. And obviously St. Petersburg has deep significance to Russia going back for centuries. And so anyway, this is not a NATO lake. It will never be a NATO lake. So don't mess around with the bear. This is just funny. So anyway, let's jump into the charts. We're going to look at oil first. This is crude oil in the daily time frame. Notice that we've got this long trend. So this is going back. We had a peak in early 2022, and we've been in a downtrend since that point. Recently poked over that downtrend, just a simple downtrend, poked over and then pulled back. But in recent days have been back pushing to the upside. We can see simple trend line to the upside. So uptrend here was penetrated, but now we're testing that level from below. And again, today we're pulling back a little bit, playing with support around the 50-day moving average. MACD dropping down into or towards bear mode, currently on a sell signal. Energy is low. So technically in an uptrend, we're low. That's actually, you call that at least a triple bottom, triple bottom, and then technical uptrend. So low, high, higher low, higher high, higher low. So even though we're currently in a pullback in oil, technically this uptrend is still intact. Notice that the moving averages are in bullish alignment. And so one of the points I want to make in this video is that the oil market is poised for higher prices, could easily move to higher prices from current levels. And of course, we've got analysts predicting $150 a barrel oil at this point. And with geopolitical situation, anything that goes off in the Middle East has a potential to send oil prices significantly higher, basically overnight. I went and I didn't need to fill my tank, but I topped off my gas tank Sunday evening, put 4 gallons, 4 gallons of gas in my tank just to top it off. So this crude oil in the weekly time frame, again, pushed up into resistance, currently in a pullback, playing with support and resistance around the 10-week moving average. Note that we've got resistance at the upper median line of this modified shift pitchfork. Looks like we poked over that level, but it is acting as resistance and have pulled back from that level. MACD in bull mode, suggesting that the primary trend in this time frame is to the upside. Note that we have a long way to go before MACD reaches this potential overbought level. So bullish chart all in all. Energy in the about the middle of the range. Crude oil in the monthly time frame. Again, MACD in bull mode, currently on a sell signal, energy is elevated, suggesting that the primary trend in this time frame, again, is to the upside. Currently in I'd call this a sideways consolidation, sideways pause. So anyway, now let's look at Brent. I typically chart Brent because it just tends to chart a little bit cleaner, but it's very similar to the crude oil that we just looked at. Downtrend broken recently. Well, of course, in this vehicle, let's compare. So yeah, in crude, light crude, we have not broken above the downtrend line, whereas in Brent, we've had a decisive break out of this downtrend and back into uptrending action. So, and same thing we saw before. We're in a technical uptrend and bullish alignment of the moving averages. MACD mostly in bear mode on a sell signal, energy very low. If we zoom in, we can see that price is pushing into resistance at the 50-day moving average. Currently has pulled back from that level. So weekly time frame for Brent, playing with a couple of different levels of resistance. We've got this horizontal support resistance zone, and then we've got the 10-week moving average. So price is playing around in those levels. MACD is in bull mode, currently on a buy signal. Energy is elevated. So bullish chart there in the weekly time frame. In the monthly time frame, I wanted to show the potential for higher prices. So this is in the gray, this is a Fibonacci extension tool, and that's the origin, and then these are the two pivot points. If we got a 1-for-1, so if we duplicated this upward movement, that would take us to $180 a barrel. So we've got at least that much potential in this time frame. And of course, currently in the sideways consolidation, we've got overhead resistance at 125. You know, you could call this a double or triple top at that 125 level. So energy about mid-range, MACD in bull mode, currently on a sell signal. So that's oil. This is natural gas. I'm only looking at one chart in natural gas, weekly time frame, pushing up into a well-defined support resistance zone. So we can see it acted as resistance twice. And then on the third time, we pushed through, tested it as support failed, and now we're testing that level from below as resistance. Note the strong upward movement in MACD, pushing up towards bull mode, and currently on a buy signal, energy is elevated. And so anyway, this is a bullish chart, in my opinion, albeit we've got some overhead resistance to work through. These notes are just highlighting the significance of natural gas. I mean, you know, as Americans, we can relate to natural gas. You know, most of us, that's our hot water heater. You know, I don't know about you, but I like having a hot shower. I like cooking on my natural gas stove. And so anyway, that's typically what we think of when we think of natural gas. What we don't think about, most of us, is that natural gas is the primary ingredient for nitrogen fertilizer. And most of the fertilizer that we use in the world is nitrogen fertilizer, which again starts with natural gas. And this is an interesting factoid. So 4 billion humans, that's basically half of us on the planet at this point, depend on food that is grown with chemical fertilizers. So without fertilizers, half of us going to go somewhere else. Just something to keep in mind. So natural gas is very important. And if you think, you hear people talking about fertilizer output from Russia being reduced, and as Americans, we think, yeah, okay, who cares really? Well, we all do, we all should. Half of us, half of the humans on this planet are dependent on food grown with fertilizers. So that's all I got today. I just wanted to do an update kind of on the state of the oil and natural gas markets. We've got a number of events happening in both natural gas and petroleum that we need to keep an eye on. And I will talk to you in the next video. So have a great day.